My name is Manny Kagan. I'm a president of Pacific Bay Financial, founder of Money Solutions Academy, and I have a very special guest today, Alex Shkolnikov. We know each other for 20 years. Well, time flies.
A little bit more.
Yeah, even more. Whoa. Alex's wife used to be my assistant years ago. So this is not about us, but rather about how we can help clients. And you might have heard that insurance industry is going through the flux vis-a-vis San Francisco and California in general. And it has huge ramification on mortgage business or ability for people to buy properties. Interest rates are a little bit higher or high, whatever you call it. And so this is not so much of interest rate, but monthly payments, because when we qualify clients, we need to have certain qualifying ratio. In the past, so qualifying ratio consists from parts. It's mortgage payment, principal, interest, and there is a property tax, and there is insurance. So when we used to calculate insurance, we used to have 3 times of a loan amount. This kind of was common practice. Let's say if loan amount is $500,000, then insurance will be $150 a month. This is how we work for years and years. And everything has changed. And the reason is because calculating risk in California, many major insurance companies decided to pull out from California. And those who stayed, the interest rates, or not interest rates, but the cost of insurance went up significantly. So it's not only it costs more, it affects our qualifying ratio, as you can imagine. So it's more difficult to qualify clients. So Alex is in insurance business. He's a insurance broker. What's the name of your company?
It's Risk Management Group 360 Insurance Solutions.
It's very long name. For me, for me, just Alex Shkolnikov is all what I care about. Whatever his name, companies, I don't care. So tell us what's happening in California and what you see the future.
Well, the short answer is the last 5 years, close to 50,000 homes were burned down.
50,000?
That's what the statistics say.
In California?
In California through the wildfires over the 5
But it's a very specific areas. It's not the whole California.
Well, yeah, actually it's not whole California, but this is not how they look at it. They just say that the risk in California, the company is invested into homeowners insurance, and therefore they're suffering losses, whatever, in the areas. It doesn't matter whether
Wow, it's huge.
So they need to offset it. So the short answer, short story would be, is that insurance companies are asking for rate increase. What they want is Department of Insurance is not giving them, and therefore they stop taking on new businesses. Act of defiance, if you may.
So this is between insurance commissioner and insurance companies. And
right.
Who is has stronger muscles?
Stronger muscles, as you can tell right now, because it's become a crisis, and I've seen this before in sometime in I think it's 89, 2000s, when the earthquake, after 89 earthquake, this was happening because the insurance companies did not want to write earthquake insurance. Then in commercial insurance in 2001 and 2, when lots of commercial property writers left the state. So I've seen this before. It happens, not often, thank God, but it does happen.
So there is so how it affects buyers or borrowers today?
Yeah, good question. Because insurance companies are not. Well, actually, let me start with this. In the last year, practically every carrier reclassified California. A lot of areas in California, including South Bay here, various parts of Los Angeles, things that never been classified as wildfire zone, they've reclassified them, which means that they no longer want to write business there. So they either will non-renew your existing policy, which actually happened to me, and they will not write new policies. So whenever you're looking to purchase a property, finance a property, or refinance a property, you need to provide insurance guaranteeing the mortgage.
Yes.
Obviously. So if you have companies that are no longer providing that coverage, therefore you're going to have a deficit in this. So in the recent months, what I have seen in the calls to my agency is that people frantically looking for policies because they were dropped by farmers insurance or by travelers insurance or by Safeco insurance, and they can no longer write this policy in the peninsula, for example, Bay Area.
Peninsula is there's a fires in Peninsula.
Yes, believe it or not, they reclassified the whole San Mateo and Santa Clara County as a wildfire zone. There is no enclaves that not affected by it. That's a part of the reason why I got canceled by travelers.
Interesting, yeah.
And when you have no inventory, right, in policies, you have to look for something else, and something else is only available through brokerage market, which is not your standard market where you would go for your, perfect homeowner's policy. It's a market there exists for non-standard situations, like properties that may have had any claims, properties that are in very bad zip codes for the fire zone, but now everything falls into that category. So clients who have not been able, who are purchasing properties right now, realistically, real estate agents have told me, quite frankly, that they will not be able to provide closing costs for the client
Yes.
without first getting quotes on insurance.
Correct.
Which used to be the last thing that everyone was
And
doing.
same with us, because I cannot qualify. Now, it's when client comes to me and I need to pre-approve them, pre-qualify. And part of the calculation is insurance.
Yes.
So it's catch-22. Until I have a property address, I can't get insurance.
Right,
So we used to do loans with TBD, to be determined.
right.
Today we cannot, because how can you or any lender or any insurance company can quote unless they know the property?
Yes, absolutely.
So it changes the whole game.
Not only that, it's that it changes the dynamic of the whole game, how this whole process works, right? But also it is the dollar amounts are
Yes.
not realistic.
Okay, let's give it specific. I have we just did purchase transaction, and there was a client received 2 quotes from different brokers, but from the same company.
Mm-hmm.
Now, the same company which were willing to insure insurance, and there was difference of $100. Well, you say, what's big deal, $100? But it is big deal when you're talking about qualifying in our world.
Right.
So how can you explain why there was a difference if it's the same insurance company?
Actually, the simple answer, and it probably is exactly what happened, is that every insurance company has very specific primary, or how would I say, included coverages or coverages that are defined by your dwelling amount. And then you can add on top of it, kind of a la carte, you can add additional coverages. In some instances, people, for example, I have a very standard practice that I do not write any policies with less than 300,000 on the personal liability rider.
I see. In other words, all of these items which you have in a policy, which of course
they could have different price variations.
I see. But why you have this 300? Where this magic number comes from?
It's just the minimum, because I believe that there are pretty much no lawsuits that can go under that these days because of the legal costs, and it's good for protection. If you own a property, as a matter of fact, you should have anywhere from 500 to plus coverage for your liability.
Interesting,
different.
because of again, issue of litigation.
Litigation is very expensive,
Yeah.
and generally any litigation runs over $150,000 to $200,000
Yeah,
when
yeah.
it's specifically for liability purposes.
And therefore, you're paying more on your insurance policy because to protect yourself. That's the whole issue of insurance.
That's correct. The interesting part is that $100, let's say, that difference. It could have been several different things. It could have been $10 here, $5 there, $50 here.
Yeah, sure.
So it's up to it. It's actually the way that the agent was looking at the policy, and either they marked some things or they didn't.
Yeah. So basically, what I'm hearing from you, it's complicated.
Yes.
To put it mildly. And I don't think that we'll be able to cover everything in this short conversation, but there is a very relatively simple solution. You either call me or call Alex. So can you give us, and we will have it written down too. So can you give our viewers what contact? How do you-
Yes, you can reach me at 415-819-8006. That's my phone. I'm always answering. If I'm not answering, you can always text me, because I could be in a meeting, and I will always get back to you within 24 hours.
You prefer phone or email?
I prefer phone and email. Sometimes email better, because if you have documents already,
Yes,
you can send it to
basically,
me.
yeah. So, but we'll put it in the notes, so there'll be a note. So same with me, 415-225-7920. Thank you very much. And my name is Manny Kagan. I promise to help you.